One day after the other, we're wrapping up the month of November. So let's welcome Wednesday, the 27th day of the month. And this is your Business Morning with me, Boston Omofai. We welcome our viewers here in Nigeria and around the world. The President of Nigeria's Senate, Ahmed Lawan, has revised the earlier date of Thursday, November the 28th, for the passage of Budget 2019 as earlier promised. A statement released from the President of the Senate's office says the Senate and the House of Representatives may pass the new budget next Tuesday, December the 3rd, and that will enable the various committees of both houses to wrap up their functions regarding the New Year appropriations. So technically, that will not take place tomorrow, as earlier promised, will now be Tuesday, December the 3rd. Meantime, the Upper Legislative House has asked the federal government to revive the $1.2 billion Brass liquefied natural gas project located in Bayelsa State and jointly owned by the State Oil Corporation, the NNPC, 49%, and 4 IOCs at 17% each. Meantime, the Lagos State government has issued a notice of full repayment of principal amount and the coupon, what you call the interest, on its 80 billion naira fixed rate bond, which the Lagos State Authority says was repaid on November the 22nd, putting everyone on Market Street on notice. And one of Nigeria's largest unlisted micro-lender, Lapo Microfinance Bank, has announced the retirement of its founding managing director and CEO, Godwin Ehigiamuso. Ms. Cynthia Ikpewosa has been named as the new Chief Executive Officer of this microfinance bank, one of the largest in the country, but not listed on the stock exchange. And Friesland Campina Wamco, which is listed on NESD over-the-counter market, or the NESD, has inked a deal with the Niger State authorities to acquire 10,000 hectares for grazing and implementing its dairy production value chain, locking itself into the Buhari's administration agri-transformation project. The Friesland Wampina, which is Wamco, says the similar local dairy production initiative had been done over the last 10 years in Oyo, Ogun, and Osun states. Okay, that's bringing everyone to speed. We'll hear a little bit more about milk production and all of that in a bit. But let's step into the marketplace quickly, giving you a review of Tuesday's trading day. The stock market had a bit of a haircut, about 0.56% on the main board. Bring it on. Let's see the numbers. We stepped back from the 27,000. As you all know, 27,000 is the psychological level, and the market is looking for a major breakout. One step in, one step out. We're down below that level, and we lost a bit below the 13 trillion naira threshold on Tuesday. If you look at the daily market volume activity, a little bit consistent, about 210 million shares for 3 billion naira in a little over 4,000 transactions. The banking sector took the biggest hit on Tuesday. 1.20% investors booked some profit in that sector. Consumer goods remain very strong, still in a positive reading from last week, 0.38%. Upstage in the industrial goods sector, which was now 0.1%. Insurance also booked profits, like their cousins, the banks, 0.60%, a little bit lower than that, but the oil and gas space remain unchanged. So let's just go to the NESD over-the-counter market, where investors ran a lot of activities into that. The NSI gained a whopping 1.02% on the day. That's a big figure there, pushing the market cap below the 507 billion when we finished on Friday to 513.74 billion. And in terms of primary volume, value, and deals, you can see the next page. That tells you a very big day. Monday, we started NESD with just about 10 transactions or deals. That went up to 23 deals on Tuesday. And finish with me the fixed income space, where you have the Naira bonds, the Nigerian Treasury bills, the NTBs, and the open market operations. Where do we start from? Bring it on. Let's see. Let's start from the open market operations. Where's it coming through? Great. Thank you, guys. Look at your discount high. We'll see a bit of this now for the OMO coming up a little bit from our average, about 12%. We're now entering about 13% for the discount high for these papers maturing in 2020. And the last one of the most actively traded 26th of December this year, 12.55%. That's nearly 90 billion in total. But if you look at the NTB, that's a little bit better than Monday. We had one single transaction on Monday. Then on Tuesday, we got 3 most actively traded. That gives you 2.3 billion. You can see your discount high for 2nd of April next year, 6.25%. That rate is down there. But again, take note of the 11 June 2020, 11% on that yield on that particular paper. The Naira bond kept on 4.78 billion in total. That's just about all of this were part of the considerations for the Monetary Policy Committee of the Central Bank, which concluded its 2-day rate-setting meeting. But what you heard yesterday from Godwin Emefiele, the head of the Central Bank, was less of rate-setting, but more about the state of the economy. Bit of a scorecard of what has been done over the last 3 years and this year in terms of the loan-to-deposit ratio, non-performing loans, credit to the private sector, the land border closure, and all of that. Let's revisit the numbers in case you missed that during lunchtime yesterday. Let's take a listen to the Central Bank Governor.
An increase in the absolute gross credit amounting to 1.169 trillion naira was recorded between the end of May and end of October 2019. Consequently, the manufacturing sector received 459.69 billion naira, the highest in 2 decades. This was followed by the consumer loans of 356.65 billion naira, general commerce 142.98 billion naira, information and communication 82.07 billion naira, construction 74.52 billion naira, agriculture, forestry and fisheries 73.20 billion naira, mining and quarrying 3.64 billion naira, and transportation and storage 3.09 billion naira, among others. The committee therefore urged the management of the bank to sustain its current efforts to improve lending to the private sector and to explore other initiatives to provide funding to other critical sectors of the Nigerian economy. In the review period, money market interest rates reflected the prevailing liquidity conditions in the banking system. Overall, monthly weighted average interbank call and open buyback rates fell to 7.87 and 7.22% respectively in October 2019 from 11.41 and 10.73% respectively in September 2019. The committee noted the persisting bearish trend in the equities market had started to abate in November 2019 and was pleased by the increased patronage in the sovereign bonds market. The all-share index grew by 2.41% to 26,991.42 index points on November 22, 2019, from 26,355.35 index points at the end of October 2019. Market capitalization also grew by 1.54% to 13.03 trillion on November 22, 2019, from 12.83 trillion at the end of October 2018, due largely to portfolio shift from government securities to the equities market. The MPC also noted the improved resilience of the banking system as the non-performing loans ratio declined further to 6.56% at end of October 2019 from 6.67% as of September 2019 and from 14.05% in October 2018. The committee, however, noted that this figure remained above the Prudential Bank benchmark of 5%, thus urging the bank to sustain its current efforts which have created this exorable prudential regime. Outlook. Overall, the medium-term outlook for the domestic and global economies remain to be clouded with uncertainties associated with the persisting trade wars between the US and its major trading partners, financial vulnerabilities, rising levels of public and corporate debts, pockets of geopolitical tensions, and weakening global output. However, the reforms underway in the domestic economy aimed at diversifying the economy away from oil over the last 3 years have provided adequate shock absorber to withstand the headwinds. However, the committee urged the fiscal authorities to invest massively in public works program and improve fiscal buffers to complement these efforts. Forecasts of key macroeconomic variables, however, indicate prospects of improved output growth for the economy. Based on recent revised projections, the economy is expected to grow in 2019 by 2.3%, IMF estimate 2.1% by the World Bank, and 2.2% the CBN staff estimates. Committee noted the tailwinds to these developments to include sustained stable exchange rate, enhanced flow of credit from the deposit money banks to the private sector, expected improvements in tax revenue and efficiency in public expenditure, continued improvements in the business environment and activities, and the sustained intervention by the bank in the real sector. Committee's considerations. The committee welcomed the improvements in output growth in the third quarter of 2019, noting that the current direction of Purchasing Managers Index suggests stronger growth in the fourth quarter. It, however, re-emphasized the need for diversification to strengthen the productive base of the economy and reduce dependence on oil. Diversification has become necessary now that Nigeria has signed the African Continental Free Trade Agreement, AfCFTA. To achieve this, the committee urged the federal government to continue to improve the investment climate and ease of doing business to attract foreign direct investment. Particularly, the government should, as a priority, improve conditions for global auto manufacturers, including for aviation and rail industries, to invest in the country. The committee commended the expansion in manufacturing output, noting that it was a direct fallout to the policy on loan deposit ratio. The committee called on government to urge the Pensions Commission to improve the prudential requirements for pension funds to refocus their investment portfolio away from their traditional choice of government securities in favor of other viable long-term investments in real estate, manufacturing, agriculture, and indeed infrastructure. Moreover, the committee called on strong visibility of fiscal and structural policies to improve infrastructure and investment conditions in the economy. It expressed strong optimism that the current policies of the bank, in a regime of solid fiscal and structural policy support, will yield strong dividends in closing the current negative output gap in the medium to long term and place the economy on a sustainable and self-sufficient path of output growth. As a key pillar of economic diversification, the MPC directed the attention of fiscal authorities to the immense potentials of the gas subsector and the urgency to encourage horizontal integration through private sector participation. This, the committee argued, will improve domestic power supply and export earnings. On price development, committee considered the moderate uptick in headline inflation in October 2019, attributing it partly to an expected temporary shortfall in food supply because of the recent land border closure and rise in demand as the festive season approaches. Although it noted that the price increase was not unexpected, it serves as a cost of the closure which is lower than the medium-term benefits. Consequently, it noted the need to drive down food prices through increased support for local production of staple foods, including rice, fish, poultry, palm oil, tomatoes, and etc. It also urged government to follow through with a sustainable policy on backward integration in the milk industry and other priority sectors of the economy. On the fiscal sector, the committee identified the need for institutional reforms through policies that would automate day-to-day processes of key revenue-generating and security institutions such as Nigerian Customs. This will provide additional advantage of stemming smuggling, kidnapping, and the migration of terrorists into the country. The MPC reiterated the need for increased efficiency in public expenditure and the building of fiscal buffers. On the impact of the recent closure of the Nigerian land borders on domestic food prices, the committee noted that any upward price movement arising from the closure was reactionary and therefore temporary. Moreover, significant investment has been made over the last 3 years to sustainably increase domestic food supply. It noted some of the key initiatives in this direction to include the commodity development initiatives designed to finance the agricultural value chain of 10 commodities, namely cassava, cocoa, cotton and textiles, rice, tomatoes, poultry, livestock and dairy, fish, oil palm, and maize, which has received 171.6 billion naira in funding. 4 of these crops received over 140 billion naira, or 81.6% of total disbursements, cassava 11.4 billion naira, cotton 40.47 billion naira, rice 53.4 billion naira, and oil palm 34.81 billion naira. It is therefore expected that the outcome of these interventions will close the supply gap already envisaged in the medium to long term, including dampening domestic prices. It therefore expressed support for the temporary closure of Nigeria's land borders, noting that securing the country's land borders should be further enhanced. On crude oil price, the committee noted the lull in the futures market, suggesting that prices will remain relatively weak into the foreseeable future. The committee therefore urged the federal government to reconsider its 2020 budget oil price benchmark of $57 to the barrel to build buffers. The committee was confident that despite the weaknesses from the external sector, efforts to ramp up domestic production through several measures by both the monetary and fiscal authorities will douse the adverse effect on the domestic economy in the medium term through reduction of importation of food and commodities. Committee's decision. The Monetary Policy Committee reviewed the upsides and the downsides of the options to tighten, hold, or to loosen. It was conscious that while tightening may encourage capital flows, it also has the downside consequence of stifling of the already nascent recovery in output growth. The committee also noted that a reduction in policy rate will improve growth prospects, but in view of the uptick in inflationary pressures, it decided that the balance of risk was in favor of protecting price stability. Considering the recovery, decline in market interest rates, growth in domestic credit, amongst other positive developments, the committee felt that there would be more gains in the short fall to medium term in holding policy at its current position. In its consideration to hold, the monetary policy noted with pleasure the positive outcomes of actions already taken by the bank. These actions include the current policy on loan-to-deposit ratio, which has resulted in loans and advances rising by over 1.1 trillion naira between June to October 2019.
The governor of the central bank, Godwin Emefiele's final MPC briefing on Tuesday. We need to drill down on some of what the governor said in that statement, in particular representing the views of both the central bank and the monetary policy members. Let's take all of that when we come back after the break.